Debt is a word that many people are afraid of. There are so many television shows, books, and magazines devoted to teaching people about getting out of debt. But the truth is that not all debt is bad. In fact, some types of debt can do you a power of good. Here we take a look at the steps you can take so that your debt serves you well, rather than endangering your financial future. So in today's video I will show you 10 ways the rich use debt to make money. But before that, make sure to subscribe to us for more videos and tap the bell icon to get notified with every new video from us. So let's dive into the video. Number 10. Margin investing. Investing on margin allows you to buy a higher dollar amount of stock than you actually have money for. For example, if you had $25,000 in your traditional brokerage account, you could leverage your investment and open a margin account. A margin account allows you to put up a max of 50% of the purchase price of a stock. You would have $25,000 in cash and an additional $25,000 would be loaned to you from your broker. Your $25,000 investment gives you $50,000 worth of buying power. You could use this money and buy $50,000 worth of stock. If the stock price appreciates, then you can pay back the loan and pocket the profit. Number 9. Debt consolidation. You can take out a new loan to pay off other liabilities and consumer debts. Multiple debts are combined into a single, larger debt, such as a loan, usually with more favorable payoff terms, a lower interest rate, lower monthly payment, or both. For example, to increase your mortgage and use the extra funds to pay off other, inefficient bad debt like credit card balances and personal loans. Your home loan repayments may stay the same, but you will be using its lower interest rate to pay off higher interest debt. Number 8. Short selling. Have you ever watched a financial program on television and heard that it's time for you to short the market? Short selling is making a bet on the price of a stock going down rather than up. Investors borrow shares of stock from their brokers' accounts and sell them at the current market rate. Their plan is to repurchase those stocks at a lower price in the future and return the borrowed shares to the owner or lender. Short sellers hope to profit from the difference between the proceeds of the short sale and the cost of buying back the shares. For example, if you short sell 100 shares of a $40 stock, you'll end up with $4,000 in your account. If in time the price depreciates to $20 per share, you can cover your position by buying back the 100 shares at $20, which will cost you $2,000. With your position covered, you've made a profit of $2,000 from the trade. It's the broker's call to decide if a stock can be shorted, since they find the shares to lend to the short-selling trader. This is usually automated, and the broker will also get back their shares automatically once the short is covered. However, short selling calls for action. The losses are unlimited. That is, a short seller can lose far more than his initial investment. Number 7. Invest the debt in a real estate. If you have debt but that debt is just to purchase the property, so use money to purchase real estate properties so that you can rent them out. Sure, the property makes money as it's rented. Because there is an income from the property, you are leveraging your money to make more money. Consider the scenario where you have $500,000 available in cash and you want to invest in real estate. You could buy one house for $500,000 and rent it out for $2,600 per month. After covering your property taxes, insurance and maybe a few other incidental expenses, you net $1,900 per month. Number 6. Debt recycling. Debt recycling can be an effective strategy to accumulate wealth over time by converting some of your debt. Debt recycling is where, as you pay off your home loan, you redraw the equity you have built up to invest in shares or other property. This can be used to pay back the loan, as well as providing tax breaks. Any excess income can also be fed back into your home loan to pay that off quicker and make further interest savings. One way to do this involves using a lump sum, possibly received from a bonus or an inheritance, to pay off your inefficient debt. If you then borrow the same amount and invest it, you're essentially replacing the inefficient debt with a debt that is tax deductible and could potentially generate wealth. Number 5. Leveraged ETFs. Leveraged exchange-traded funds allow investors and traders to amplify their returns by going long or short on a particular index. While a traditional exchange-traded fund typically tracks the securities in its underlying index on a 1-to-1 basis, a leveraged ETF may aim for a 2-to-1 or 3-to-1 ratio. These funds let you invest in specific indexes, bonds, commodities, or sectors. Leveraged ETFs are attractive because of the extraordinary profit potential. During market booms, you can achieve returns with leveraged ETFs that other investors dream about. Number 4. Use debt to fund your education. Whether it's a 3-year university degree or a 3-month course, acquiring skills gives you the opportunity to find work or, if you are already employed, to earn more as you grow your career. Education is expensive. However, banks and other organizations such as corporations and governments offer student loans to help you pay for a good education. Just like home loans, student loans usually have low interest rates, and repayment of the amount loaned is deferred until you qualify. Number 3. Use debt to start or buy a business. Got a great business idea but need funds for equipment and premises? Or, do you want to buy a franchise in a great location? Although some businesses require only a few $100,000 to start, many require more than is in your bank balance or savings account. Use debt to start the business. Grow your business, pay off the loan, and in a few years you will not only be growing your generational wealth into a valuable legacy you can leave to future generations, you'll also be an inspiration to others. And, if you employ staff, you'll be helping others earn an income and grow their wealth, which is also great for the economy. Number 2. Hedge funds. Hedge funds that are typically pull from high net worth institutional investors. The fund managers seek high returns with these funds using unconventional investing strategies. One such tactic is the use of leverage to chase massive gains. They engage in margin trading, that is leveraging their brokers' money to make bigger. Hedge funds are some of the biggest users of leverage. They are famous for generating abnormal returns by using leverage. Many hedge funds lever up to 10 times their total assets. Billionaire hedge fund managers like John Paulson have used leverage to turn accredited investors into multimillionaires. However, if the fund manager's investment thesis is wrong, this can drive a hedge fund out of business and lose the capital of all investors. Hedge funds such as Long-Term Capital Management, which needed a bailout, were levered up as much as 30 times their assets. Number 1. Forex trading. Compared to stocks, Forex trading allows you far greater leverage. In some cases you can leverage your account up to 100 to 1. What this means is that for every $10 in your account you'll be able to trade up to $1,000. The Forex market offers such high leverages because the risks involved are more manageable. Leverage is a function of risk, so if a trade is well managed, the risk is also well managed. Which is why they can offer such high leverages. Currency trading allows investors to enter a transaction with borrowed funds. The borrowed funds are used to increase the investor's trading position beyond what they would otherwise have as available cash balance. They can then potentially turn their initial small investment into massive amounts instantly. Conversely, an investor can amplify his losses in the same manner, and the higher the leverage you apply on the capital, the higher the risk you'll take on a trader could be cleaned out in minutes. Those are the 10 ways the rich use debt to make money. Hope you got some value. If so, make sure to subscribe to us for more videos and tap the bell icon to get notified with every new video from us. See you in the next video.